When you invest in surging markets, we need to focus on beat down sectors, but which have a long prospect and strong fundamentals.
My name is Arpit Arora. I'm India's leading personal finance expert and passive income coach, and I'm on that quest to change the middle class of India and transform their financial life in such a way that they are able to have the potential to follow their passion. They have the focus to follow their passion. They are not distracted by money because they're creating enough passive income, and most importantly, they're able to live with inner peace and joy. And that, my friends, happens by winning the game of money. That happens when you upgrade your financial IQ, and that most importantly happens when you are committed to achieve financial freedom in your life, because it cannot happen without a commitment. And it is my commitment to make sure you get all the support that you need to walk and achieve that destination.
What sort of mindset is required in market surging? When markets are going up, you're getting great returns. People in FNO are making money like anything. What sort of mindset is required when you start putting your money? Because very well likely, I can mention 4 or 5 companies to you right now who will very likely give you a great return. 80% chance will give you not good, great return. And if you buy their futures and or options, then so it's totally crazy. Maybe you're not going to make as much from your business in a month as you can make from this in a week. Very likely it can happen. But the question here is, would that be the right sort of mindset? What is the right mindset that is required in a time like this? So the first thing we need to understand is that when you invest in surging markets, we need to focus on beat down sectors, but which have a long prospect and strong fundamentals. Okay. So what are the beat down sectors right now? IT is one of them. So if someone who has less equity exposure and is building their equity exposure now, it is better to focus on IT type of index and think 5 years ahead rather than investing in, let's say, Nifty 50 or mid cap or bank index, something that is already at a very high value. The second one is, which is my preferred option, is I rather sit into a cheaper asset. So a cheaper asset like debt would make more sense for you to sit in it right now. Investing in long-term debt with hoping for interest rate cut could also be another great strategy inside the debt investment, so that you can make double-digit return like I showed you and told you before. And the last one is something that we are obviously waiting on, but investing in alternative assets like REITs and InvITs can also be a good option because they are unaffected by what is happening in the stock market. So rather, REIT and InvITs are on a lower side in terms of pricing right now. You would also understand that people have limited money, right? So either they can invest in equity or real estate or gold or REITs or debt. So money moves from one asset to another. This is what creates the cycle in all of the asset classes. But it is very unlikely to find all the assets doing together at all. People have limited money. They keep money moving from one asset to the other. Where do we want our money to be? In the asset where the smart money is moving. When I say people, I'm talking about smart investors, not just investors. These are institutional based investors or foreign investors. That's the sort of people I'm talking about. So in a time like this, our mindset should be to focus on value rather than momentum, because everyone is investing in momentum, and momentum is the reason why stock markets go up more than they should. That is what creates the euphoria. So the mindset should be a little different in that context. One thing I would surely say is, and I think we even made a video around this on YouTube, is momentum versus value investing. You'll always find value investors make more money because momentum requires a lot more time. You can make more money from momentum as well, but if investing is not your full-time job, then it's a very difficult task because momentum requires you to buy and sell and then buy and then sell. So you're really active. And then you have to be really good into your analysis as well. Only then you can make more money from momentum versus the value. Else, value wins all the time. In case this is not a situation for you, value will always win.